Hello traders, welcome to Investoo.com's How to Trade Binary Option series. And in this lesson I'm going to teach you a 1-hour binary option strategy. This means that we are going to be using the hourly expirations to trade BOs with this particular strategy. Okay, so this is a very simple strategy, and the only indicator we are going to use is the Parabolic SAR. And as you remember, SAR stands for stop and reverse, which means that we are going to be trading reversals in the market, okay? And well, let me show you first of all the parameters that we are going to use to trade this strategy. We are going to use a 0.005 step and a maximum of 0.2. This will give you a parabolic SAR that looks like this. Now let me show you, if we reset the parabolic SAR to its default parameters, you are going to get a very choppy parabolic SAR, and you are going to get a lot of false breakouts. So what you need to do is you need to lower the step to a 0.005, okay? And you're going to get this kind of parabolic SAR. Now, first of all, what you need to remember is that when price is above the parabolic SAR, it means that, or when the parabolic SAR is below price, it means that we are in an up move, and when the parabolic SAR is above price, it means that we are in a down move, okay? Now, the first thing, or the first setup that I'm going to show you is this short setup right here, okay? And remember that because we are in a immediate move to the upside, we are going to look for a break to the downside of this parabolic SAR. Now, remember that this strategy needs to be traded in very volatile hours, because if you trade it in a non-volatile hours, you are going to get these kind of setups, okay? We need a strong break, okay, and we need to price to continue with a momentum to the downside in this case, or to the upside if we have a break to the upside, okay? Now, the first rule is that if you are looking to buy put options, it's because price is moving in an uptrend, okay? If price is moving in an uptrend, you are looking to buy put options. If price is moving a downtrend, you are looking to buy call options, okay? Now, the second rule for a true breakout, the candle that breaks with the parabolic SAR needs to also break with the previous area of, in this case, support and the previous lows, okay? Now, this is very important. We are going to also use price action for our entries. Not only we need price action to break with the parabolic SAR, but we need to break to we need for price action to break with the previous area of support if we are trading to the downside, or resistance if we are trading to the upside, okay? In this case, we are trading to the downside, so the step number one, we need the price or the bar to break with the parabolic SAR, and it also needs to break with the previous area of support. In this case, we have both breaks, so we buy put options when this candle closes. Why are we going to wait for the candle to close? Well, that's very easy. Just take a look at this red candle right here. This candle broke with the parabolic SAR, and it broke with the area of support that I have marked right here, but it failed to close below the area of support and below the parabolic SAR. This means that we have a rejection of those two zones, which means that we don't have a trade, okay? And price could have very easily continued to the upside. This is why we need a break and a close below the area of support and below the parabolic SAR. In this case, we enter right here on the 50-minute chart. Remember, we are trading hourly expirations, so we want to trade the 50-minute chart. And if our entry is here, we count 1, 2, 3, 4 candles. Our expiration candle is this red candle right here, which means that this option expires in the money, okay? Now, let's continue to the let's continue and let's look for another break. Okay, and you can see that we have a very strong move to the downside, and then we have what seems to be a break on of the parabolic SAR right here. Okay, now the thing about this is that you can see that we have one, two, and a third candle that clearly rejects this area, or this area of resistance, and the parabolic SAR breakout. So we are not going to trade this this breakout, even if we have a breakout afterwards. If we have three candles of rejection, we don't trade the setup. Okay, if we have two or less candles of rejection and then the breakout, we are going to trade the setup. Okay, now let's go back a little bit to see if we can look for a nice bullish. Well, let's look at this example right here very shortly. We have a break of the parabolic SAR. We have a break of this area of support, and the entry is right here. 1, 2, 3, 4 candles later, we have a winning trade. Now let's look for that break to the upside. Okay, so let's look at this example on the US dollar Canadian dollar 50-minute chart. You can see that from this high to this low, we have moved 100 pips. Okay, and we have a very clean parabolic SAR right here. You can see that we have 1 and 2 rejection candles off of this area of resistance and the parabolic SAR. And then the third candle breaks with the parabolic SAR and the area of resistance. So we have our entry right here at these levels, and if we count 1, 2, 3, and 4 candles later, this option also expires in the money. So the rules are very clear. If, well, you need a very clean parabolic SAR, which means that if you have this kind of parabolic SAR, you are not going to be trading it, because it means that you are in a very choppy market. You are going to be waiting for a very clean parabolic SAR, then you are going to wait for a break of the parabolic SAR and the previous area of support or resistance, and that depends if you're trading the up or the downside, and then you're going to enter the trade.